financial strategy. Things you need to consider is your debt. You need to make sure that you cover your debt. Any debt that you have that has a higher interest rate than you could reasonably get on a fairly safe investment. Typically, you'd look at what bonds return. So if you could get 4.5–5% on your bonds, then any investment below that rate you would not want to pay off, and any investment that has an interest level above that rate you would want to pay off early. Cash holdings. You should review your cash that you have on hand and cash equivalents. We'll talk a little bit more about that in here soon. So necessary expenses. These would be expenses that are not common recurring expenses that would be in your baseline budget. These would be expenses such as repairing the roof on your house, or something else that you know is coming up that's a major non-regular expense. Now you should consider insurance to protect your assets and your income. There are a lot of types of insurance, but you need to look through them. Anything that you don't insure, then you have to assume that you're either okay with losing it or that you can afford to pay it, replace it on your own in some other manner, or to cover it. Then you need to plan out your investments to achieve your goals. So these investments need to be separated by time frames and types. So your short range goals, you're going to come up with an investment plan for those that's usually going to be low risk and fairly liquid, or at least time bound. So your low risk investments could be CDs, they could be individual bonds, they could be a bond fund. There are actually numerous other types of investments. You can see our website at onesmartstep.com for a pretty complete list of investment options. Your long-term investments would include things like your stocks, bonds, diversified portfolio of funds. All of those types of things would be considered long-term investments, as well as investing in things like real estate, having a rental property. Those would typically be long-term investments, and you'd want to pick a method that works for you and your goals and the amount of time you have available. Financial strategy, implementation. This covers your immediate non-recurring needs and can simply be subtracted from your budget. So you don't have to come up with a special plan for recurring needs, just the ones that we talked about that are not. Your short-term goals require low-risk liquid funds, and your long-term goals, you want to maximize return while minimizing risk based on your experience and risk tolerance. So that goes into your selection of investments. There are many different ways to invest, and some of them are much higher risks, but you want to make sure that the risk you're willing to take is outweighed by the return you're likely to get. And if you could get a similar return with lower risk, you always want to go for the lower risk option.